Hello traders, welcome back to another survival guide. What if I told you that there's a way to gain access to one of your favorite markets but at a much lower cost or at a much lower risk? Of course, risk and reward are correlated, but what I'm talking about is the MNQ versus the NQ. The NQ is the Nasdaq 100, the MNQ is the mini Nasdaq. It allows traders to get into the market at a much lower cost than previously thought possible. This is something that we're going to discuss today. We're going to talk about the contract details of the MNQ in the futures world, as well as the most popular trading strategies that traders are currently using trading the MNQ. So sit tight, buckle up, let's rock and roll and have some fun. Here we go. If we're interested in trading Nasdaq futures, most of us are going to say, well, we have the E-mini Nasdaq futures, which is the NQ ticker symbol, or we have this new thing called the MNQ, which is the Micro E-mini Nasdaq futures, which provides us an even cheaper way to get into the market. Let's talk about what that is, but first, let's cover a quick overview of the Nasdaq 100. It was founded in 1971, and the Nasdaq is one of the largest stock and security exchanges in the world, second only to the New York Stock Exchange, the NYSE. All trades are made electronically through market makers, so traders don't have to deal directly in a physical location with the Nasdaq itself. Like other futures markets, the Nasdaq futures market is a derivative market where the traded futures contracts are tied to underlying instruments. In this case, both Micro Nasdaq futures, which is the MNQ, and the E-mini Nasdaq, which is the NQ, are based on the Nasdaq 100 index. The Nasdaq 100 is a large-cap growth index that tracks the performance of the 100-plus largest non-financial companies by market capitalization that are listed on the Nasdaq Stock Exchange. Most of the companies operate in the technology and biotechnology industries, accounting for as why it is such a popular option amongst today's traders during the technology boom. The graph here really illustrates the power that the Nasdaq 100 has shown since around 2013 when compared to the S&P 500 performance. So the Micro Nasdaq futures, the MNQ, these are something that is a leveraged instrument that allows futures traders to speculate on the Nasdaq 100 index itself in an efficient and relatively cost-effective manner. These futures contracts are deemed micro, quote-unquote, because they are 1/10 the size of a standard E-mini Nasdaq 100 futures contract. MNQ contracts, for example, each tick is going to be worth 50 cents compared to $5 for each tick with a regular NQ contract. MNQ futures were launched by the Chicago Mercantile Exchange, the CME, in May of 2019. These futures are targeted at traders looking to gain exposure to the Nasdaq 100 index without having to raise a large investing capital base before they get started. Like other types of futures contracts, the Micro E-mini Nasdaq 100 obligates owners to fulfill their contracts at specific settlement dates. Micro Nasdaq futures are typically settled in cash, just like pretty much all other futures contracts that are traded, which is going to be calculated as the difference between the price when the contract was bought or sold and the index's current price at the time of settlement. The Micro NQ futures are traded around the clock with participants from all over the world. Some traders turn to them as a way to hedge their exposure against overall market risk. Because it is a tech-heavy index instrument, many traders also use these micro futures as a way to find and capitalize on diversification opportunities. So if you're looking for liquidity, look no more. Here, we can see the MNQ contract details, which can also always be found on CME's website. This is going to show us the things like the contract unit, which in the case of the MNQ is going to be $2 times the Nasdaq 100 index. Comparatively, if we talk about the NQ, the E-mini NQ, the regular, not the micro, that's going to be $20 times the Nasdaq 100 index. Remember, the micro is 1/10 the size of the regular E-mini Nasdaq. There's other things listed here, such as the minimum price fluctuations on the right-hand side here, and this is going to be representative of what we refer to as the tick size. But moving on from this, let's talk about MNQ futures as far as NQ futures. So, the biggest difference between the MNQ and the NQ can simply be boiled down to the size of the notional values of those contracts respectively. Remember, NQ futures have a contract size of $20 times the Nasdaq 100 index. And remember, MNQ, the Micro NQ futures contracts, have a contract size that is 1/10 of the size of the regular NQ futures contracts in the E-mini department. And that is going to be $2 times the Nasdaq 100 index instead of $20. This means that our tick size is going to be different. Remember, MNQ tick is going to be 50 cents, whereas NQ tick is going to be $5. So they are going to be based on the same thing. If you like one, you'll like the other, as long as you feel that the capital exposure or the amount of leverage the market is providing you is suitable for your personal trade plan or your personal preference as a trader. As far as trader strategy, when it comes to trading the MNQ, the top 3 categories of what traders are doing today at the time of this video are breakout trading, pullback, and fundamental analysis trading. Let's talk about breakout trading first. As the name suggests, this strategy is going to be applied when the asset's price breaks out of its usual chart patterns. That is going to be up to you to decide what the definition of usual is, but simply put, this would be what we do when we are looking for a resistance level to break and then capitalize on that expected momentum gain once we break through that barrier with that anticipated extra volume. Then we have the pullback strategy. Now, this strategy involves taking advantage of price pullbacks to make money, meaning we're generally looking with a pullback strategy to get a better value on our overall longer-term expectational move. This means that if the market is climbing upwards, we're watching the MNQ go to the moon, but temporarily it draws down. As a pullback trader, we would look at this as an opportunity to get in for the long continued ride upward while getting a better value on the current shorter term pullback. Then we have fundamental analysis. So fundamental analysis is going to be really just where we're analyzing all of the fundamentals, and there are a number of ways to do this. Most traders are going to analyze the companies that are in the Nasdaq 100 index itself. By analyzing the companies and being aware of how they are doing or how they are performing or how traders themselves might be responding to news releases that they are putting out, we can use this information to get an idea of what the index itself, the MNQ, might be doing as a whole. Is it going to be going up today or is it going to be going down today? All of this categorizes as fundamental analysis trading. So, we can think of the Micro E-mini Nasdaq 100 futures market as a place where our trades are moving at 2 miles an hour versus 20 miles an hour. Now, of course, this is going to present the argument of, wouldn't we want to move faster? Well, yes, but only once we are sure that we know what we're doing. And the truth is, many traders at the beginning of their career would be more likely to get to the point where they'd be capable of safely operating at 20 miles an hour when they start operating first at 2 miles an hour. Good luck out there. Happy trading. I'll see you all very soon.